Objective 3, which is compute predetermined overhead rates and explain why estimated overhead cost rather than actual overhead cost are used in the costing process. So this slide presents why I use an allocation base. We can answer it in two parts. Part 1, that the manufacturing overhead is applied to all jobs that are in process. We apply overhead using a base we believe causes overhead cost to incurred. So some companies allocate manufacturing overhead using direct labor or machine hours, right? So the part 2 is that we must allocate overhead cost to jobs for a variety of reasons. Number 1, it is difficult, if not impossible, to actually trace overhead costs to a particular job. The cost of, for example, grease for machinery to manufacture our product, it is a part of our manufacturing cost. So it would be impossible to accurately trace the amount of grease consumed to manufacture 1 unit of the output. So here, manufacturing overhead includes number of different costs, and it would be very difficult to gather all of them together in time to charge them to a particular job. So a job may be complete or sold before we can determine the actual overhead cost incurred. So finally, many types of overhead are fixed in nature, even though output fluctuates during the period of time. So I hope I answer the questions that why we use the allocate base. If you still have any question, please do write us here. So how the manufacturing overhead is applied. So we're going to answer also in two parts. Part 1, and that to facilitate the allocation of manufacturing overhead to the each job, we calculate a predetermined overhead rate before the period is begun. So the rate is so this rate basically is calculated by dividing the total estimated manufacturing overhead for the coming period divided by the estimated total units of the allocation base. Estimated. So the idea is that before the job is taken or completed, so we estimate that how much cost will be occurred at that time when the cost is when the job is done, and how much total units or allocation base will be used to complete or for this cost. So we just divide it and we will call that POHR, and which call that predetermined overhead rate. So part 2 is that ideally this divisor that divide the total manufacturing cost is basically the allocation based is the cost driver that causes the overhead. So normally direct labor, machine hours, or direct labor hours are used as a cost driver. So the logical question that should arise is that why there is a need for predetermined overhead rate. So the predetermined overhead rates that rely upon estimated data are often used because the actual overhead rate for the period are not known until the end of the period, so thus inhibiting the ability to estimate job cost during the period. The second one is actual overhead cost can fluctuate seasonally, thus misleading the decision makers as well. Now, as I told you what is POHR, so now how to determine the predetermined overhead rate? We call it POHR. So first, we must estimate the level of production for the period, and next, the step two. It's a three-step process. The second one is we estimate the total amount of allocation base in the denominator that would be required for the level of production. And finally, level 3, we estimate total manufacturing overhead cost in the numerator that would be incurred for the estimated amount for the allocation base. So the predetermined overhead rate is calculating by step 2 by step 3, right? So in order to further clarify the predetermined overhead rate concept, I have included exercise 3.3 from the page of your book chapter 1 to 1. So I'm going to give you 5 minutes to read this question, and then we're going to solve it together. So before that, try to solve it by yourself and match the answer later on. Okay, let's read it together. So Harris Fabrics computes its predetermined overhead rate annually on the basis of direct labor hours. So our cost driver that drives this manufacturing overhead is direct labor hours. So at the beginning of the year, it estimated that the total manufacturing overhead would be 134,000, and the total direct labor hours would be 20,000 hours. Its actual total manufacturing overhead for the year was 123,900, and its actual total labor hours was 21,000 hours. So you are required to compute company's predetermined overhead rate for the year. And we know that what's the formula for predetermined overhead rate? Estimated manufacturing overhead divided by estimated cost driver. So here is the estimated manufacturing overhead, which is 134,000, and estimated cost driver based on direct labor hours are 20,000. The answer is 6.70 per direct labor hours. So our predetermined overhead rate is 6.70 for the year.